Welcome traders, welcome ATAS community. How are you doing? Let me know in the chat if you can hear me and you can see me and you can see my charts. Welcome everyone once again. Before we're gonna get started, once again the quick deck check. Let me know in the chat if you can hear me, if you can see my screen, and we're gonna get going. Okay, yes, sound is good, fantastic. All good. Hello, good to see you, good to see you. Once again, welcome everyone to our live trading session on ATAS platform. We started it last week, so this is our second live trading stream with all together with you, our community. And it's my big pleasure to be able to host it. My name is Anastasia. And for those of you who don't know me, I've been trading for the past 9 years. For the past 6 years, I've been a loyal ATAS footprint and volume profile trader. And right here I am. I have an honor to also help you to become better traders as much as I obviously can. So last week we started our first regular live trading streams. We're gonna go live every single Thursday at this exact hour on ATAS YouTube, and we're gonna have a look at the markets together. We're gonna check different markets depending on your preference as well. We're gonna see some interesting opportunities, and perhaps we can find some really good trades. So today, in focus on our attention will be the stock market. US stock indexes, because this is exactly what you requested last time. So last week ago, we actually had a look at gold today together. And for those of you who've been on our live stream, if you remember, if you go back, you will be able to see that gold did exactly what we predicted, what we analyzed. Their thing about it is that it didn't happen during our live stream together. So I didn't take a live trade, but we did make an analysis. And afterwards, a day later, you saw perhaps yourself that all the analysis and the levels that we were aiming for were triggered and achieved. Okay, so for those of you who've been there, congratulations. Perhaps you were able to catch some really nice moves in the market. For those of you who haven't been there, today is our day. So let's see what the market has in store for us. So fantastic, Matuza. Very good. Thank you so much for confirmation. Thank you. Good evening, Akram. Good evening, everyone. Everything is fine. Very well. Very good done. Great. Well, let's have a look at the markets. I have the mini S&P 500 opened in front of us. I have the 30-minute time frame and also range XV charts. It's usually the combination that I use. So I use the 1 hour, 30 minutes, and then I go down to 5 minutes of range XV charts and different combinations of different smaller time frames. So I do use a multi-time frame analysis in my trading as well. And I do really utilize often the range XV charts on ATAS platform, together with obviously the footprint charts combination. So I use the order flow analysis through the 5 minute time frame or the range XV depending on the asset. So if you talk about the currency pairs, for example, then you go for 5 minute time frame, whereas for the US stock index futures, 5 minute S&P 500, NASDAQ, silver, gold, I'm gonna turn towards range XV charts instead, because the 5 minute time frames mostly is the very big time frame for the footprint charts for this type of assets. Someone says, very choppy day. It is indeed. It is indeed. We did have the U.S. housing, the U.S. labor market data coming out 2.5 hours ago, regular data as well. And we have the export and import prices as well out too, which didn't really move the market a lot. We did have some volatility on the smaller time frames on metals, but if it comes to the US stock market, it didn't move anywhere since the beginning of the day. However, this is something that you requested last week, so we're going to have a look at it. And if it doesn't bring us any interesting opportunities, we're still going to turn towards a different asset and see if we can maybe find something more interesting there as well. So let's have a look at this, okay? And yes, I'm going to explain the range XV charts. Yeah, I'm going to explain range XV charts. I see your questions in the chat. Okay, I see your questions. I'm going to have a look at it in a moment. So first of all, what do I actually see on the S&P 500 and what am I going to be aiming for? Because it's something that I do always. I always first build my bias and I build my scenarios first, and then I wait for the scenario to be completed, in a sense that I mark up the interesting areas for me, levels and conditions under which I'm going to be taking a trade. and then I wait for these conditions to be triggered. Okay, so let's have a look at this. Only saying rotation day so far. Yes, it is indeed. It is indeed. So let's have a look at the 30-minute time frame on S&P 500. So I want you to see the bigger picture first. So if you look at the bigger picture, and I'm going to turn off my cluster search for a moment being, so we don't really need it at the moment. So what we can see here, we've been in the uptrend now since already the beginning of the year. Most of the stocks in S&P 500 and NASDAQ has significantly declined. Some of the stocks lost 15, 20%, 25% of the value from the top. Now, at the same time, the indexes itself have lost 2 to 5%. So we didn't really have a massive drop yet. We cannot really talk about the bearish market yet, not from the macroeconomical perspective, because there is no reason for the market to yet drop. We also need to notice that there will be a midterm elections very soon in the US. And as we know, perhaps you don't know, but as an inaction, normally I'm not really expecting the market to be bearish. And the reason for this is because Trump needs the market to be bullish for the midterm elections. So normally it would be expected for the market to continue higher. At the same time, we know that the majority of the growth for the market, specifically also for NASDAQ, but it also did influence the rest of the market, including S&P 500. The big part of this growth last year was driven by the AI, so the artificial intelligence, and now at the current moment, artificial intelligence drivers have been slowing down. We also do have competition coming out very soon. So the DeepSeek is going to be releasing the new model of their AI, which is going to be costing 4-5 times less for the AP than the rest of the AI in US. So this may have also influenced the pressure on the AI, on the US AI market. And as a result, if AI industry goes more down, it might drag indices. Now, at the same time, we do have the macroeconomical factors that are mostly going to be contributing towards the bullish market. And once again, we can speculate as much as we want about the future prices. What is interesting for me is the current price behavior. So for the current moment, right, what we see is that there is not yet a reason to talk about the bearish market, and there is no technical aspects neither, which are pointing towards the beginning of the bearish downtrend neither, because as we can see, those were our all-time highs. Okay, this is our all-time high, but at the same time, okay, so let's just type it here, all-time highs. At the same time, the previous level of support, the zone of support, is between essentially 6,800 and 67. Okay, so it's 6760s, 6800s. So this is a zone that the price has been holding. As we can see, we've been returning to the same zone and testing it since December 2025. This was a zone of the big volume accumulation over the period of September till November 2025. Okay, so the base of the volume, the base of the money that is supporting the price now has been built throughout autumn 2025. Okay, and as we know, the tariffs were taking an effect as well, at this period of time. So there is a lot of money that was coming in based on this too. So as we can see, since the December, we've been holding this level and the price haven't gone lower than this. Now, what is important to point out, and one of the technical signs that I use also to analyze the most likely direction is the fake outs below the lows and above the highs. Usually is stop loss taking, where there is a majority of the retail traders place their stop losses above the highs, below the lows when they go swing shorts as well as swing longs. So as we can see, we had the previous low here, right? We had one low here. We had also one low here. So the price has been testing the levels lower than this, and on exactly last week, on the 6th of February, we had the dip below the previous lows. So normally this is a sign for me of the upwards rotation. So taking all the factors together in the account that over the period of time since December, we couldn't break the zone, although the price tried. We did have a fake out and we did have a very quick V-shaped recovery. We don't have yet macroeconomical reasons to believe in the beginning of the bearish market, and we are holding above the volumes. All of this together is overall telling me that my direction will be mostly bullish. So first things what I do is I build my preferable direction bias, and at this current moment for both S&P 500 but also for NASDAQ, my bias is currently bullish. Now, another thing that is contributing to my bias is the volume of this current week. So what we can see here is the lines on my charts are essentially the volume lines. So this is a point of controls, also a point of control as well as a dynamic levels. So those are dynamic point of controls which are showing how is the money flowing throughout the market, right? Which levels are the most interesting for the market participants, on which levels we have the majority of the money invested. And at the current moment, we can see the blue line, the blue dynamic level, which is representing the weekly point of control, weekly dynamic point of control. So the majority of the money during this week, as we can see, moved below the price. And this is the levels approximately 66, 62, and 66.60s. So we have lots of money that was invested since the 2 days ago until today at this zone right here. We have also the dynamic level of the month. So this is a black line here, which means that on the monthly basis, the calculation for the months, the significant also was also traded on this level. So we have the dynamic levels from both weekly and monthly perspective confirming the interest of market participants towards this zone. Okay, so this is the zone of the support for the current market, and I'm expecting it to be a hold normally. What is also interesting, volumes we don't need so far, is that currently, as we can see, the point of the dynamic levels right here is a dynamic level calculated by delta. Okay, as you can see, dynamic level calculated by delta also went below the price and is currently supporting the price, meaning that majority of the buyers were putting their buying positions right under where the price is currently. So the wicks has been testing this level, taking the liquidity, and the price has been bouncing back up. Now, as I know that my bias is bullish, now I also know my zone. My zone that is going to be a bullish zone, buying zone for S&P 500 preferable is here. And the second one is a wider one, all of this here. So all this zone is the price, as the price holding above the zone, I'm going to be considering S&P 500 as bullish. Now, in the circumstance, which is of course possible because everything is possible in the market, if the price does dip, but not only dip, but also closes below this zone. So if, let's say, 30-minute candle on which I do my analysis and 30-minute and 1-hour candle closes below this zone, this is the circumstance under which I will eventually consider the price turning bearish for the current moment being. I don't necessarily expect the whole bearish trend to start. It's not going to be enough for me for confirmation, but I am going to be expecting, if the price does deep and close below, one of the scenarios will be that I'm going to take sells from these levels back into my previous buying zone here. Right? So this is a less likelier scenario, okay? This is a less likelier scenario. This is not something I'm considering now because my primary bias is bullish, but I want you to know that always when I make my decision, when I make my analysis, I eventually evaluate the chances. What are the chances that the price will continue up? What are the chances that the price will continue down? And I highlight for myself what will be the invalidation of my bias, of my ID. So if I have a bullish bias, I have a bullish ID, what will be the invalidation of it? Well, invalidation will be breaking and closing below this zone. Now, let's say that the price holds above the zone and we are normally bullish. Okay, so let's have a look at the levels of interest. So where is the volume coming in on the daily basis today? Right, so the black circles here is an indicator in ATAS called cluster search. And this indicator points out the clusters with a specific filtered amount of volume. So for me personally, on the 30-minute time frame, what I want to see is the 3,000 contracts or more. So what I see is that we had 3,000 contracts here, here, and right here. So I want the price to be able to close above this level here for me to go bullish on S&P 500 until the previous zone here. So if in the circumstance, if the price will be able to close and hold above the zone, I will go long until the next zone here, which is 69.15, 69.19.5. Okay, so this is the current zone of my interest. And where is my target? Well, my target is here, right? As much as also my next target will be at 69.35, which is the previous volume here. As we can see, the zone has been tested multiple times as well. So this is another area which I'm going to be taking into account when I'm going to be eventually, for example, taking profits, right? So my bias is that from this area here, from this zone, this gray zone that I have, I'm going to be looking for a buy for until this areas here, with my targets being at first here around 69.15, 69.19. Okay, so this is going to be my first target. This area here. My second target will be right here. My third target will be the point of control of the contract. And my fourth target will be at the point of control of the week, 69.63, and dynamic level of the months too. So this is my current ID for S&P 500. Now, I want to confirm my entry based on the range X3 charts, which I'm going to be talking about in a second. I want the price to close above this volume strongly. And as we can see, the price is still hovering. This is this 3,000 contracts that we had traded just before our live stream started. I could have taken the sell here. It would be the high risk sell from this volume, but it would work. And now I want to see the price closing above this volume on the range X3 charts. So if the price closes above this range X3 chart here, I'm going to go long on S&P 500, somewhere here, depending on where the market will be. Okay, and I want let's say the final target will be 69.63. I want something like this to happen. Okay, so this is this is something that I would want to see. So I want to see the price closing above this now. The range X3 charts, for like, since you guys wanted me to talk about it, because while we are waiting for the price to close above this level, I can talk about the range X3 charts, because right now it's stuck in a range. So the risky entry would be here for a buy. The less risky is to wait until the price is out. We have some confirmation of liquidity, and then we take a buy. I take a buy. Let's see. If you have any questions, by the way, in the meantime, let me know in the chat. The cumulative delta is also consolidating. Nothing much here happening so far. So this is something I want to see. Liquidity is up. I'm not sure about the liquidity is being up, to be honest with you, because recently a lot of money has been outflowing, retail money, has been outflowing from the market. The reason for this is that uncertainty levels based on multiple indicators and studies, uncertainty levels has been higher than during the COVID. And when uncertainty levels are so high, people tend to take money out of the market instead of bringing money in. The majority of the volume and liquidity in the market is the retail liquidity. So if retail traders take the money out of the market, liquidity drops, volatility increases, market becomes more unpredictable, of course. Okay, I have lots of questions from you. I'm just highlighting it. Yeah, Dirk, actually, we've been just talking about with my colleague today, my colleague, that there are the chances and expectations for the rate increases, which we are obviously not at the point from the perspective of the US economy for the rate increases, rate hikes, but some of the market, some of the participants of the Federal Reserve and Trump's organization want to see the rates being increased. So I'm not particularly, well, not Trump organizations, but the Federal Reserve, right? But I'm not particularly expecting the rates to be hiked. But with such expectations, obviously, we get the lower probability of the rate decreases as well, the rate cuts. So. Okay, let me see. Really happy to hear it. If you have any questions regarding anything that you see on my charts, I'm here to help. So make sure that you ask them. Trump is speaking later as well, so the first year has been even the market. Yeah, the market is tired. Yeah, everyone is tired because of the uncertainty, as we said before. You know, the uncertainty levels has reached the higher levels than COVID. So it says, I think this says a lot, you know, about the market as well right now, the market state and the people state as well, you know, how people feel about it too. So people are tired too. You know, the more uncertainty it is, the riskier it is, the more money is taken out of the market because retail traders just simply don't want to risk it. Now, technically, I want you to see something. Technically, I could have taken a sell here. So I would be able to just take a sell because we just had more volume coming in here. We had the daily dynamic level and the hourly dynamic level moving here as well above the price. Now, also, if we look at the cumulative delta, for example, we had the drop. So this was a bearish volume coming in. So that was beats coming in the market. Now, I would be able to take the sell, and it would make sense technically because we have a range, right? So this is just the top of the range, so it would be technically just a simple range trading. Now, the reason I don't take this kind of trades is because they need to be aligned with my bias. So if you are a scalper, for example, it's a little different approach than from what I do. I find my one direction of the day, and I simply wait for the price to reach my entry point or entry conditions for my trade to be executed. Now, there are scalpers, for example, that prefer to trade in any direction as soon as they get confirmation, right? So this would be my confirmation if I would be a scalper to go short, right? So if I would be a scalper, this would be a reason for me to short S&P 500 now because I am expecting the price to now come back here. These conditions have not been filled yet. But as we can see, the dynamic level of the hour, so this is the hourly dynamic level, this is a cluster search, the new one, we are respecting this area here. So there is a chance that the price is just simply going to go down from this moment. Let's see how the 30-minute candle closes. The higher is the uncertainty, the more coffee I consume. Yep, me too. Okay, so we had lots of questions about the range XV charts. Here's Murtuza asking about the range XV charts. We had also some questions about the range XV from Focat. We also had a question about the range XV charts from Niho. So let's get to this. So the chart that you can see in front of you right now is called the range XV. It's a proprietary chart type in the programming of the chart right here. Now, the way I trade with it and the reason I use it, right? The reason I use it in general is because it allows you to see the faster moves of the market than the Japanese candlesticks without their noise that is created by the Japanese candlesticks, because the Japanese candlesticks, since they are based on time, they're going to be printed anyway, despite either there is volume or there is no volume in the market, there is an interest or there is no interest. Now, whether it's with the range XV charts, first of all, the structure is much clearer because you might notice that there are barely no wicks on this chart type. Now, secondly, it reflects every single faster move of the market, even faster than if you go, for example, to the minute time frame, which allows me to trade based on the structure much more efficiently than I would if I would trade the Japanese candlesticks. Because even if you take into account, for example, their cluster search, what we see here is that cluster search has a perfect two rejections, which is a perfectly two highs being created, which is a Japanese candlesticks. You might not notice it, you might not see it, and it's not going to be as clear rejection as you would be able to see on the range XV chart. The same, for example, the 30-minute candle. Now, it's not very clear, right, what is happening, whereas if there's a range XV charts, it's very clear what the price is currently doing, so the structure is more clear. There is less noise, there is less weeks, so less the things that are making you lost and uncertain in the market. It allows you to see faster moves, so react faster as well, and as we know in trading, time is money. And it does not represent the range in the typical sense of the range that we are used to. Now, the price is really ranging and there is no volume, there is no interest right now coming in the market. The range XV charts are going to print what is called the triangles. So every triangle where the price is creating a formation like this is basically the small consolidation of a small time frame on the asset. So this is an accumulation of volume, which afterwards can be used, for example. First of all, it doesn't let you take a trade, because when you see this happening, it means there is no interest, no money coming in the market. So there is no point of entering the trade. However, later, these levels can be used as a reference point for entering or exiting trades, because it's a small accumulation of the volume. So when the price comes back to the same level in the future, you might consider taking sell from this level, or you might consider exiting your buys from the same exact level. So this is also might be the level from which the price might reject. So if it closes here and we enter for a buy, this is also the area that I need to watch out for when the price reaches it. Okay. So range XV charts are pretty much my go-to charts if I want to enter the trade, if I want to manage my trade, and if I want to exit my trade. So my confirmations for entering trades, managing my positions, and closing my trades coming from the range XV charts. Also, the footprint on the range XV charts is much more efficient and much more detailed than on Japanese candlesticks. And the reason for this also is how much volume is created in this one candle. So for Japanese candlesticks, sometimes there is lots of volume and sometimes there is nothing. So sometimes the footprint is completely empty, and sometimes it's the opposite. Footprint is completely bright and full, and so full that you barely can see the amount of bids and asks traded. Whereas on range XV, this is usually not the problem, not the case. So you can clearly take a trade, when the time comes. So it's usually the faster way, the more efficient way to manage your positions. And I'm going to take a buy now on the S&P 500. I would want to see the price a little bit lower, but it's not going to happen. So I'm just going to take a market buy. So the reason I took the market buy is this footprint on range XV. I want to see the price not going below this level. So my stop loss is going to go at the level of 73.7300. Okay, we might hit the stop loss, let's see. But my objective is to see the price holding above this zone here of this candle. The reason for this is because we had lots of buyers coming in. We have the we have the beautiful bright delta at this level here. And if we hit the stop loss, we're going to wait for the next confirmation to re-enter this position once again for a buy. The next position might be, where we initially wanted it. Let's see if the price will hold above this yellow zone. Once again, the yellow zone is the value area, point of control, and the value area low of this candle with a bright green delta. Now, just a moment ago, when this candle has been formed, our developing point of control of the 1 hour has moved lower, which is confirming that the new volume, big volume, is coming in the market right now, right? So as we can see here, sorry guys for this. So as we can see here, the new volume coming in and the price is trying to close above this volume, which means that there is more buying interest coming in the market. So the price is back at the break even now. And I'm going to hold this position. If the price is able to break through this zone later, so if we have the break and close above this zone, I'm going to add to my running position. So I'm going to open another buy order. So I want to see the price going above this zone. As you can see, we had lots of buying green deltas also formed here. I want to see the confirmation of the price closing above this area first. And then if yes, I'm going to add to my buy once again. I'm not trading oil since COVID times, to be quite honest with you. So I really didn't have a look at oil for a while. We just talked about this today, that oil has been so choppy that it's very good, I suppose, for the swing trading, but for the intraday trading, it has been horrible. And since I haven't traded oil, I also haven't looked at the oil inventories for a while, because I cannot follow all the news that are out in the market, and it's not necessary for me, because if I don't trade this asset, I also don't follow the news that are directly influencing this specific asset. No worries, with the coffee will survive. Yep, exactly. Yes, for sure. No other way, right? You win. Sometimes you win, sometimes you lose, sometimes you learn. This is the market, so it is what it is. The market is the way it is. The game is the way it is as well. Remember that my stop loss is right here, 73.00. So if the price is not going to hold above this yellow zone, which is the point of control of this area here, we also had more volume coming in on the bottom of this candle. So I basically want the price to hold above this zone. And if it breaks down through the zone, it's okay. We're going to exit the trade, and then we're going to wait for another confirmation. Answering the question in the chat, I trade my own accounts and I trade prop accounts too. So it's both. I trade much less of prop accounts than I did before. I'm switching more towards my personal accounts, because well, there is no point at some moment. Your goal is obviously to build your own capital and to trade on your own capital, not rely on the prop accounts, because the props are very good for the beginners. There is a way to build your capital. There is a way to build your portfolio, obviously, track record, try things out, build your emotional discipline as well, build your confidence, in your strategy, twist and trick your strategy and find your edge. But then your goal is to trade on your own money, because then you have much more freedom, of course, and you're not relying on the prop firm rules anymore, which sometimes are limited. No, below the value area high and the value area low are coming from this candle. It's not a daily one. And the other one is coming, this is the dynamic level of the months, not of the day. So great question. So this is basically my entry condition. I was expecting the price to just rather continue higher. This is the reason that I took the trade, right? But as we can see, we are testing it. So my best entry, which is right now, is not the best entry, right? My best entry would be at the test of this delta. So we had bright green delta, we have buyers coming in, supporting the movement. The price reacted to this. Normally, the best entry conditions would be by the price testing it, one tick above the green delta, so the price at 6877.75. So this would be one of my best entry conditions for this specific trade. Now, at the same time, answering this question, there are many different entry conditions that I can take. If you look at the, even we hosted many webinars and intensive also on ATAS platform, so you can find them on the ATAS YouTube. And there are many different entry, entry models that I use. There is a specific way for me to identify my bias and my strategy, so like the overall direction that I want to trade today with this specific asset. And then for the entry models, I can rely on footprint. I can rely on cluster search. I can rely on cumulative delta, for example. I can rely on the cross of dynamic levels. I can rely on, for example, volume within the footprint. I can rely on many things. So my entry conditions differ from trade to trade because depending on the asset and the situation, different situations give me different entry conditions. And also every entry model has its own probability. So the win rate, usual win rate that it has. So obviously on every entry model, I use the set risk, sometimes more, sometimes less, depending on the profitability of this specific entry model. And sometimes many entry models and entry confirmations occur at the same time, and then it's a high profitability trade, so high probability trade. And then I can risk a little bit more. It all depends on the situation in the market. But if you are interested to find out more about the entry conditions that I use, first of all, we're going to be hosting these live trading sessions every single week. Again, the last week, the market was quite choppy. We were looking at gold. This week, we are looking at S&P 500 because this is what you requested last week on our live stream as well, and in the comments afterwards on our Telegram. But as we can see, also the market has been quite choppy. Sometimes it's going to be choppy, sometimes it's going to be more movement. In any case, it's going to depend on the market, how active our live trading sessions will be. But once in a while, we're going to get a very good live trading sessions together because the market will be moving exactly at this point very well. It's something that we cannot control, obviously, but I hope you're getting value, even if the market is choppy like this. So let me know if you're getting value on this session, on this live stream with me. If you are getting more knowledge, if you have any questions, this is also the time when you can ask them. So let's use this live stream to the fullest with you. So I answered this question. So this trade most likely is going to hit stop loss. And if it does, we're simply going to wait for their new opportunity together. It is respecting right now the dynamic level of the months. So if it holds above this, good. And if it goes below the previous low, I'm going to wait for another confirmation, and we're going to re-enter the trade when it allows us. Thanks a lot. Thank you so much for the feedback in the chat. I really appreciate it. That's amazing. My footprint settings, sure thing. So you go to cluster settings. And currently for this specific asset, again, I use different footprint settings for different class of assets because, for example, for gold, for oil, for silver, so for commodities in general, I use the volume based footprint and not the delta based footprint. Yeah, this one is going to hit the stop loss. We're going to wait for maybe a new entry condition during our live stream, and if it occurs, we're going to take another trade. If not, we're going to wait until it does. So for commodities, I use the volume-based footprint. For their indices, so US stock indexes. For currency futures, I use the delta bid and ask based footprint. So if you go to the cluster settings, we're going to see that I have the content bid and ask. I have the mode on full row, so it colors a full row, and I have a color scheme in delta. I have the blue and the green and red color scheme. It depends on your personal choice, which you can adjust, of course. So those are the main settings. And then currently my proportion settings are set for the whole charts, and the proportion is approximately 90% at the current moment. So those are the most important settings that you need to set it up in the way that it looks on my chart right now. But again, I use these settings for example, S&P 500, for NASDAQ, for currency futures, so 6E, 6B, 6A that I trade, and for gold, oil, silver, for commodities in general, and metals, I use the volume-based footprint. So instead of delta, I choose the volume setting. Okay, so this is something that I use normally because in my personal experience, it's usually responding better to volume. Yes, Akram, you can trade the Euro stocks as well. Great, thanks a lot. Thank you so much. I use a market profile, yes, but the best, it hits stop loss. So we're gonna wait for the re-entry. If it does, give us the opportunity, and if it not, it's also fine. So for the market profile, TP1 market profile, I use it, but not in the standard way. So I don't use a histogram, which is the indicator. I use a histogram, essentially, here, manual placement history, the histogram, this one. However, I have a lesson on it, and I have the full marathon and intensive on how to use the TP1 market profile. You can find the links to this on the Telegram channel of ATAS, as well as there is a playlist on the ATAS YouTube channel where you can find the lessons on how to use a market profile, TP1, and also the footprint chart. So they are created by me, and you will be able to watch it. So it's going to be better than if I'm going to be explaining it here now, because it's going to take a while. Okay, so this is invalid already. I can delete those zones because these zones for this specific trade. Now, this condition for entry is still in play. So if the price closes above those big volumes, right, this 3,000 contract in each cluster that is shown. So if there is the opportunity when the price closes above the zone, I'm still going to re-enter my buy. Okay, so I want you to know that my next entry condition for S&P 500 for a buy is basically the price closing above this volume. And if it does, great. We're going to take another trade on that. Let's have a look at the 30-minute time frame here. As we can see, the 30-minute time frame is basically testing the previous volumes too. So this zone, the higher risk would be to just take a buy from this level here. However, again, I would need to see some kind of activity of buyers on the footprint charts, which for the current moment, we don't really see, right? We see the price currently tanking. So there is also no reason to take that trade at the moment. I also did have a look at NASDAQ prior to our live stream. No, I do not do mentoring. However, I'm on ATAS community, so if you have any questions to me specifically, you can always tag me in Telegram. I'm going to be more than happy to answer you. I do the weekly overview of the trades, so the specific trade that I took over the week, the breakdown, so you can learn. It's on the ATAS Telegram channel as well in the open group, so it's for free. Same as I also do the breakdown of the specific asset of your choice. And we're also going to be doing the weekly market overview in the video format soon, so you will be able to access this as well. So for NASDAQ, the same exact scenario as for S&P 500. So overall look is exactly the same. My bias is overall bullish for the next days. We have the majority of the volume here. So this is between the dynamic level of the day, the previous level of dynamic level of the day, and dynamic level of the months. So this is where a majority of the volume is trading. I am expecting the bullish movement. and from this level or from this level. And my conditions for the bearish rotation, for bearish trend begin, would be, first of all, if the price closes below this zone, it would be towards the pullback and continuation into this zone. And only if the price closes below this zone, I'm going to be looking for the reversal back to the downside. Now, at the same time here, I am, for now, until the price holds above this gray zone, the upper one, I'm going to be looking for the upwards movement with the targets at this zone here. We had lots of volume coming in. It's 25,120, which the price has tested already from both sides. We also, if we look at the volume distribution from the upwards movement, we see that this is the majority of all the volume the price is currently holding. So, which makes sense, this is a buying area. And here we have this zone here and this zone here. So I would want to see the price preferably holding above this zone for the bullish bias confirmation. So those would be my buying targets for NASDAQ if I would go along. However, the reason I started with S&P 500 today is because S&P was looking more clear. Although they both quite choppy today, we have lots of consolidation, rotation, not enough momentum for me personally to trade it. Compared to this, S&P 500 had a little bit more, I feel, life in it. So let's see how we respond to this level here. What I want you to see is this zone here for S&P 500. Let me show you. I want to see the reaction of price at this level. We had lots of volume coming in here. We have this area that was already once tested. This is the point of control of the whole movement. So the majority of the volume from yesterday's 17th of 2 days ago, 17th of February, until the tops on the 18th of February, majority of the volume was traded here. So I made this level global so we can see it on the range XV charts, and we can see if there is a reaction and volume coming in. So preferably what I would want to see is cluster volume here at the bottom coming in, confirming that there is a big interest of buyers, and buyers are ready to step in and drive the price higher. So this is something I would love to see, which we don't yet have for a current moment being. My cluster search is set for 3,000 contracts. Now, no, of course, Oli, it's a different criteria for the volume for 30 minutes and range XV charts. Of course, because the bigger is the time frame, the longer the price stays at the same zone, the more time it has to accumulate the volume. So you need to set higher volumes for the higher time frame, because the average volume for the higher time frame, so the average volume that is traded in 30-minute candle, is not the same as the average volume traded on the range XV charts, for example. So for S&P specifically, on 30-minute candle, I have the 3,000 contracts in 30 minutes. Now for the range XV is 1,000 contract. Okay, so this is different. So there's 3,000 and 1,000. Let's see where we are. I want to see if I'm going to be looking for a buy now on S&P 500. I want to see the price touching this level, the cumulative delta preferably touching this level. If cumulative delta is going to go down to 5K flat, this level, so a little bit lower, which is approximately 68.58, I'm going to go long one more time on S&P 500. Okay. So this is a second entry condition, as I was saying. This is a second entry condition. I want to see their divergence between the cumulative delta and the price. Okay, so I want to see the divergence between the cumulative delta and the price. As we can see right now, the price already went down. Cumulative delta is still consolidating. So I would want to see it coming back to the same exact low. And this would be my extra confirmation for a buy. How did I calculate my volume criteria? Based on the experience. So it's been a very long time since I used cluster search. But again, it depends on, I miss this entry probably, but that's okay. It wasn't the perfect trade because for different assets, it's also going to be different volume. The level of the volume that I just gave you is applicable specifically for S&P 500. For NASDAQ, is going to be a different volume. For 6E, for example, is going to be a different volume. For gold, is going to be the different volume. So for every asset, the average volume will be different, and you need to adjust it based on whatever you trade, because for S&P 500, it's 3,000, 1,000. For gold, for example, is 150 now and 25. So 150 on 30-minute time frame and 25 on the range XV. But it changes. Yes, it is. But you know how they say better to miss a trade than to lose a trade? My perfect entry condition would be if the price would touch this level. This is my entry condition, which it didn't. It didn't touch it. It didn't touch it. I didn't take an entry. So I'm going to be waiting for another entry condition that the price can give me. Another entry condition, if the price closes above the zone, we can also take another buy. Okay? We can also take another one, another long. For NASDAQ, for the cluster search, 1 second. For NASDAQ, for cluster search, I use on the 30-minute candlesticks. Thanks, Akram. Thank you for being here today. If you have any questions, I'm always here. Have a great rest of your day. And I do hope to see you again soon as well. For NASDAQ, for 30-minute time frame, I have 500. So for range XV, you would have approximately 100, 150 contracts. Yes, you can set the clusters on different colors. So you go to the cluster search, for example, and let's say you want to set up not based on the volume, but based on the beats, right? So only cells. Then in this case, you lower your volume approximately, let's say 300, and then you change your color to red or purple, let's say, right? And then you want to say, okay, I want to only see buys. So I change it and I go to green. So yes, you absolutely can. Of course, depending on whatever you need to trade, you can do exactly this in the settings. I trade total amount of volume, so it's 500, and then I use delta indicators, cumulative delta, normal delta, and so on to confirm whether it was buying or selling. So I don't differentiate my cluster search for buys and sells. I use the delta indicators for this purpose. Yes, exactly. You need to add indicator twice for this. Let's see. Maybe it still goes down here. If it does, I can take another buy. 30-minute candle is trying to close above my volume as well. That would be another entry, which would be a little bit more risky on the test of the 68.66.25. But we have 2.5 minutes until the candle closure on the 30-minute time frame, as we can see right here. I prefer to see how the candle is going to close, because if it closes below this volume, chances are we're going to go down. And we know with the current volatility, the price can do anything. So sometimes it's better to wait for the candle closure. Candle closure for me is also one of the confirmations of the direction. So I don't look at the wicks so much. I look at the body of the candle closure above or below the volumes. If you have any other questions, now it's a time to ask. We are coming closer to the end of our live stream. Slowly, the market has been quite choppy. But we are here every single week, same time, same place. So we're gonna join the live streams and see what the market has in store for us every week, every Thursday together. So no, I have 4 different setups that I can take for the entry specifically. It can be equal highs, equal lows on CVD and divergence on price, or the other way around also works. So the equal highs, equal lows on price and divergence on the CVD. Whatever happens, I can take it, as long as there is a divergence. At the current moment, if I look at the range XY charts and the cumulative delta, we can see the equal lows on the range XY here and divergence on the price. Okay, so for example, another one, the opposite would be if the price would reach this low, which it did already technically, but cumulative delta would go here. So either cumulative delta goes to this level and I can take a buy, or cumulative delta goes to this level and then at the price chart I can also take a buy. Because in this moment as well, price will be also lower and it's going to be the divergence on the price and equal low on the cumulative delta. But both work. Answering your questions, both can be applicable. Okay, 30-minute candle just closed. I don't yet see the buy-in pressure as much as I would want to see it. Fairly honest. Another confirmation that the buyers are active or not active can be on the imbalances on the ask side. We had some imbalances a little bit on the ask side here. Nothing, nothing, nothing. More imbalances on the ask, more imbalances on the ask, and again, nothing. So for me, we don't have enough confirmations at the current moment for a buying pressure. I would want to see more confirmation that buyers are ready to step in and drive the price higher before I'm going to take a trade. So good watching, great session. Thank you so much, team. Really appreciate the comment. Appreciate the feedback. Once again, I obviously want to see more trades happening, active live trading session. It depends on the market. So if you stick with us and you join every single week, I'm gonna explain lots of different nuggets for trading. We're gonna explain lots of things. Oh, here we go. Look at this. Okay, guys. So this is something that I want to see. This is the cluster search right now with a more, so basically more bids and asks at the current level. Let's see if the price is able to close above or below it. So currently it's trying to close below it. As we can see, the selling pressure is coming. Okay, the selling pressure is coming. If the price will be able to go above this, I'm going to take a buy. Technically, we could take a sell right now, but once again, at the same time, the reason I'm not taking the sell and I want to buy specifically is because we are right at the dynamic levels and right above it. So my overall bias is bullish because on the high time frame, the price is above the volume. So although on the smaller time frame, there is less selling volume coming in, the buying volume on the high time frame does not allow me to take short. So I have the misconnection between the high time frame and the lower time frame analysis. And for my perfect trade setup, I want to see the lower time frame and high time frame combined. So if some of you are questioning, okay, there is selling volume coming in, the price just closed below it, why she's not taking sell, is because the high time frame does not correspond with the lower one. So for my trading system, I want to see both of them correlate, and I want to see both of them either on buying side or bullish buying side or bearish side. Yeah, I know, but this is why I trade gold, guys. But last week, we had a request from the audience to have a look at S&P 500 and NASDAQ, and here we are. Dustin, thank you so much. I really appreciate it. Means truly a lot to me. Thank you so much. Means a lot, this comment. Appreciate it a lot. We're gonna have lots of fun on this live trading sessions in the next weeks. I use clusters, exactly. This is something that we've been obviously doing the whole trading session. So I use clusters within the cluster search. I use clusters within the footprint analysis. I do not use unfinished auctions anymore, and I do not use the big trades because they are necessary for my trading system. I used to apply them before, however, I didn't find a big shift in my profitability using them, so I just deleted them and my trading has become a little bit more clear, which doesn't mean they cannot be used. It means that for my approach, they were necessary. But I know a lot of successful traders who do build their edge around using big trades, for example. What do you mean the monthly time frame? The monthly time frame is right here. You can go to configure, unless I'm here you put custom and you put here the 1 month period of time. So 1 second. Second, 1 second, I'm being stupid. No, I'm not being stupid. Here you go, your monthly time frame, the amount of minutes in essentially the months. Here is your monthly time frame, can be set as a custom. See you next week. Thank you so much for joining. I'll see you next Thursday. Okay, so great question, because I'm using ATAS on MacBook right now. So the screen that you see right in front of you is essentially the MacBook usage on ATAS usage on MacBook. I use it here on this laptop through parallels, but great news because ATAS X is released in the demo version and a beta version for MacBook. So if you're a MacBook user, you can request to access the ATAS X and it goes together with your subscription. So you can test it. I trade on my second laptop using the ATAS X already for 2 months, and it's been nothing but amazing. Honestly, the loading time is just fantastic. Everything is working perfectly for me personally, so you can request it and use it. Thank you so much. Thank you for joining. Yes, I know what you mean. It's some kind of solution for the current moment. Thank you so much for being here. Really appreciate it. Thank you so much. Thanks a lot. So I don't trade based on the structure because, as you can see here, I don't believe the structure is broken. The reason for this is that we did not break the previous lows. So this is the previous low right here, and the price has not broke this low. So for me personally, we did not break the low, which means that we are still in a bullish situation. So this was a previous low, this is another low. So only if the price would break through this low and close below the zone, I'm going to consider the bearish scenario until the value area low 68.26 and 6800. At the current level, I'm still bullish. The price is just not giving me the entry that I want. That's different, but I'm still bullish biased. I'm Ukrainian, by the way. Yeah, it's not closed and it didn't even go below the low. So I'm still bullish basically on this. Let's check quickly NASDAQ one last second, and we're going to be closing off our live stream for today because we know the entry conditions. If you watch the charts for a little bit later, you might still get a really good buy. I'm going to keep an eye on this as well myself. Exactly, yes, agree with the comment. So as we can see here, the price is still also above the previous lows for NASDAQ too. So I'm still bullish biased both on NASDAQ and S&P 500. I do want, however, to see the buying activity coming in the market and holding on stronger. So we did have an attempt to buy S&P 500, which at this very moment didn't work out. That's fine. So what I want now is either cumulative delta touching one of these levels and buying by market, or I want the price closing above 68.93 on the range XP charts, above the previous volume, and I'm gonna buy it again with my stop losses being below this zone here. Okay, so there are 3 ways that I'm gonna buy S&P 500 closure above these volumes with stop loss below these lows, or cumulative delta touching one of these levels and buying by market. Дуже тобі дякую. Дуже тобі дякую. Вже 6 років тому. Довга історія. Yes, exactly the same as for NASDAQ, but for NASDAQ I use the range XV4 for the current moment, and I use range XV6 for gold, and I use range XV2 for currency pairs. Dirk, I honestly don't use it myself. However, the best way that you can receive the answer the fastest, because I'm only going to be here 1 week later, is to ask a question in the Telegram chat of ATAS or Discord chat of ATAS, and they're going to be able to reply to you immediately. It's the fastest way possible. Thank you so much, Timo. Thanks. Yes, exactly. You can use ask, and it's going to reflect the aggressive buying. So the buy orders filled by buy market, and you're going to use bid for the sell by market orders. So the bids are going to be showing you the orders filled by the sell by market or buy limit, as well as the asks are going to be showing you the buy by market or sell limit, because they are filled together. I have a lesson on this on asks and bids at the first lesson, one of the marathons on the market auction theory and price formation. You will be able to find on that as YouTube channel. And for the rest, guys, thank you so much. We have 3 different conditions under which we can still buy S&P 500 now. I wish you the profitable rest of your week. Be careful with the Trump speaking later as well. Mind your risk, protect your accounts, because if you survive long enough, you're eventually going to be profitable. Make sure that you know that managing your risk, make sure that you know that sticking a long time in the market is most important part in being profitable. Sometimes you cannot be profitable every day. Sometimes you can for some period of time, but managing your losses, managing your emotions, and waiting for the perfect execution is the way to go. So thank you so much, guys. Take care. Have a profitable rest of the week, and I'll see you next week, Thursday, same time, same place, for our next portion of the live trading together.